Hello, everybody, and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. My name is Jesse Day. Before we get started, standard disclaimer: nothing here is investment advice. Do your own due diligence. And today's guest is the founder of Wealth Research Group and an expert on geopolitics, gold, and investing in uncertain times, much like those we are in today. It's Lior Gantz. Welcome back to the show.
Thanks for having me back.
Great to have you back. And today we're going to focus on some massive changes that are occurring in three main regions of the world: Russia, the Middle East, and China. We're going to focus a bit more on geopolitics for this conversation, which of course plays a huge role in the commodities market. So I think it's really worth paying attention to. And I want to start with an update on the Russia-Ukraine conflict. At this point in time, in your view, what are both NATO and Putin hoping to accomplish? And what is the worst case scenario that each is trying to avoid?
Okay, let's start with the Russian side. So originally, the goal was to take over the entire country of Ukraine. The strategic thinking behind it was that Ukrainian oligarchs will move sides as they did in Donbass in 2014, and that NATO won't lift a finger as it did in 2014. But once that didn't materialize and we entered a lengthy war, I think that as it stands right now, the Russian economy has been able to weather this far better than anyone could have anticipated coming from any Western country. In other words, their economy is contracted by 2%. That's it. And this is after the worst sanctions in human history, quote unquote. So they've been able to actually be very resilient throughout this time by switching most of their energy exports to China and India, which that like to buy cheap oil, capped oil, because of Western sanctions on Russian exports. And at the same time, we have to really understand that the West could do much more, and it doesn't. And the reason is that it understands that a country like Russia is important for the health of a global economy. You don't want a country like that you don't want to back it into a corner too much. And just so we understand what I'm talking about, in every port in the world, most of the insurance on vessels, especially oil tankers, is Western companies. So if you really want to sanction Russian oil, you can just tell Western companies they can't insure Russian tankers, and that's it. That's how you really cripple the Russian economy. Obviously, they are not doing that by design, and so they are letting the Russian economy move on. And of course, Russia also sells to Europe through third parties still. So I think that Russia's economy has overall fared this very well, and they can wreck on way more debt than they currently have. They have one of the lowest GDP ratios, GDP to debt ratios of all the Western nations. So for them, this lengthy war is not a real problem yet. On the flip side, Ukraine without Western aid would not exist anymore. Their economy is contracted by 30%. They've seen a lot of issues, and they cannot handle this for much longer. And they're not making any big advances on the war front as well. So I think that where this is headed is towards the U.S. elections. And if Biden wins re-election, then that will create one sort of scenario, and if he doesn't win, it will create a whole different scenario. So I think that for the most part, for the next year, both countries will kind of have to be at the stalemate. Very unfortunate, very tragic. And once we understand where the American public sits on further aid to Ukraine, we'll know where this is going. For Russia, this has been and always will be about access to the seas. Russia has built, or I should say the Soviet Union has built a network of pipelines through Europe from the 60s into Eastern Germany, and it was all good until the Soviet Union collapsed, and now those pipelines actually moved through sovereign countries, and some of the former Soviet countries had different agendas than Mother Russia. So war over oil, natural gas, and coal has been around for 30 years now. So I think that in general, a country like Russia that doesn't have any deep sea ports and is actually trying to build ones through the northern passes through Siberia, for them it's always about sea access. If they had sea access, they could be the world's strongest country. And so the relationship between them and Turkey over the Black Sea, over the Dardanelles, over the Bosphorus, it's always been a critical part of the war. And that is why Turkey even joined NATO in the first place. So I think that will continue to be their main focus, how they can protect themselves and have sea access. For NATO, it's about the opposite. They want to contain it as much as they can. They want to contain Russia, and adding Sweden and Finland to NATO is just adding thousands and thousands of more kilometers to protect for the Russians. So that's obviously the strategy there. Worst case scenarios for both countries. So for Russia, because it's far less democratic than Western countries, far more centric, a lot of what can happen here can result in what happens when a person like Vladimir Putin loses control over a country. For now, I don't see that happening because internally he does have about an 80% approval rating, one of the highest in the world. And I think that if something happens and he has to go with some drastic measures, he will. So that's the worst case scenario on the Russian side. NATO, I think the worst case scenario is if they lose their unity. NATO was a very weak alliance for many years because after the Soviet Union collapsed, NATO really didn't have a purpose. It was built to hold and protect Europe from the communistic spread. And once 1991 came along, it really did not have much of a purpose. Yet it did continue to grow and strengthen and add more countries. And so now that it's very unified and it has a huge budget, I think that between Turkey being this weird actor within NATO and new countries from Asia looking to join NATO, I think that the lack of unity is their worst scenario. And that can happen because next year, 2024, 3.4 billion people are going to vote. So it's a huge election year everywhere in the world. And when you vote, governments and candidates promise you a lot. So I think that we will see how the world will shape itself anew next year. So 2024 is gearing up to be a pivotal year for everyone, for the whole world. 3.4 billion people, that's over 60% of global GDP that's voting next year. And you know that they will vote for anything that they can get from their governments. So I think that 2024 is shaping up to be an incredible deciding year.
Fascinating breakdown. You did touch on the public's appetite for supplying aid to Ukraine in the United States following this upcoming election. My own home country of Canada, Zelensky recently received more aid from there as Trudeau pledged to support. Bafflingly, during Zelensky's recent visit, an actual Nazi officer was given a standing ovation in the House of Commons, which just shows how absurd this whole thing has become. So I guess my question is, why is the West pouring so much money into Ukraine? Why do they feel that they need to do this? And who ultimately foots the bill? Does this increase inflation in the countries that are providing this money? Is the taxpayer ultimately on the hook for this? How does that process of it work?
For the United States, once the shale revolution occurred in 2011, um, along with the failed wars in the Middle East that were literally over oil. There was no incentive for the Sixth Fleet to stay in the Middle East. They saw a rising threat out of China, and the United States had to start mobilizing in the South China Sea in order to protect the first island chain. And if you don't know what that is, please just research it, because that's where the Third World War will probably commence, or that's where the big regional war between uh, China and the neighboring countries will begin. So once shale revolution began, and an incredible amount of natural gas reserves and oil became available in the United States. Um, for them, Europe has always been a great market to export to. In terms of values and everything else, Europe is much more connected with the United States than with Russia. Russia is just a phenomenal economic incentive. So once Trump's 2018 speech about all countries needing to contribute 2% of GDP to the security, and America is going inwards, and globalization is no more. America's biggest incentives to defend Ukraine against Russia is to become a very important exporter of LNG to Europe, which they have become. They're the number one right now, and I think that will grow even more. I think that the United States has a huge incentive in terms of trying to contain Russia, because Russia can disrupt the Middle East, and along with China, delay the exiting of the Middle East for the United States, and then focusing just on China. So they, using the Wagner Group and other tools at their disposal, they can stay in Syria, and they've actually won the war that they fought in Syria. So because Assad is back in power, and he's even been invited to the League of the Arab League, so that's it. He's reinstated. So Russia has done a lot of geopolitical wins in the Middle East lately. Obviously, China coming into the Middle East to broker normalization between Iran and Saudi Arabia, and both of them joining the BRICS. These are all big moves that are part of the agenda for Russia, to create chaos for the United States so that they cannot focus just on the South China Sea. So for the United States, that's a huge incentive. Turkey, being a country that can fall either way between Russia and the West, it's crucial for the United States to protect the Crimean Peninsula, because that's a big win for Turkey. And obviously, the United States wants to be on the side of Turkey. So I think those are big incentives for it, as well as just the general threat that Russia always poses onto the world, because they are just so vastly rich in resources that they arguably have been the biggest threat to the United States in the last 250 years, save for a few years where Japan was a really big threat. So that's on the incentives. There are a bunch more that are more sophisticated. One of them is that this war shows China how the U.S. will act if they try to invade Taiwan, and that's important, or Taiwan, or any of the weaker island chains, so Philippines, or any of the islands of Japan, etc. I think that that's one thing. And then a big one is that now that this has happened, Germany, France, Sweden, all of these countries are militarizing. And when you militarize Europe, you are selling a lot of weapon and defense system. And that is obviously important for the United States. So I think, and Japan is by far creating one of the biggest militaries in the world, and they're buying a lot of technology from the United States. So between all of these, that I think are the overarching incentives for the United States. There was a second part of the question. I'm sorry, could you repeat it?
Yeah, it was who ultimately foots the bill. Is this the taxpayer? Does this increase inflation and so ultimately get paid by citizens of a country through the stealth tax that is inflation? I mean, when you look at just Canada, to give an example, I think it's 10 billion or something up now at this point that they have earmarked for Ukraine. And meanwhile, homelessness is shooting up. We're getting, there's always been a lot of issues with drug addiction, with fentanyl. A lot of people are overdosing. There's very few resources being put towards the people of the country, and that's angering a lot of citizens there. I think it's the same in America as well. So I'm just wondering who ultimately pays for all of this.
Well, the national debt of countries like Canada or the United States or any of the Western countries, the overall consensus right now, if you talk with economists that actually sit at the highest level of government think tanks, they all look to Japan, and they all say, look at Japan. It's a Western country. It has a 200% debt to GDP level. We have nowhere near that. The United States is at 98 or 99% of GDP. I mean, under that theory, they can double their debt and still function as Japan functions. So most of these politicians, they are not thinking about raising taxes dramatically or cutting spending. So theoretically, who foots the bill is your grandsons and granddaughters, et cetera, et cetera. But at some point, yeah, there will be some sort of a reckoning. The overall idea of the modern economic theories is that these countries can handle these debt levels and that they don't meaningfully change anything. And it's up for obviously for debate between those that do see connection between these high national debt levels and debt to GDP ratios and inflation or crime rates or anything else where you can divert that money somewhere else. So it's a very, very complicated issue. And I think that it's too grand of a subject to ever be dealt with. It will be dealt with when there's no escaping talking about it. But for now, as you see Jerome Powell saying, it's unsustainable, and you can run a country like that forever. But no one lifts a finger for the meantime, and it doesn't concern anyone. And as you can see, institutions, the largest institution in the world, continue to buy U.S. debt. So it's just a big blunder of things. Whereas a normal person, you're sitting there and say, "How's this possible?" And in the meantime, it's possible for 50 years now. So it's a mixture of both. I like to just say, for my part, from my end, I took 2 years worth of my family's expenses. So you take your monthly burn rate as a family unit, you multiply it by 24 months, and you say, okay, this is the amount of fiat currency I want to convert to physical gold and silver. And to me, if there's a 2-year depression, I have 2 years worth of my living expenses saved in the best possible form of money for the last 5,000 years. So I know that if this thing is going to create some catastrophe, I have at least that. And I think that if all people in the world will do that, then a lot of the problems will solve themselves anyways. So yeah, that's my opinion. Don't wait. But in the meantime, you cannot just put yourself in a cave and do nothing in life. Life is proceeding. So it's almost like you're on a train, but you're always ready to jump off at the same time.
Right, very well said. I'd like to shift to the Middle East now, where Iran is on the verge of acquiring nuclear capabilities. How does this impact the balance of powers globally?
Yeah, it's on the verge. So a lot of things are happening to stop it dead on its tracks on the verge. But even if they achieve enrichment of uranium, we're talking about a bomb, like one bomb. When you think about the world in general, in the 1970s, there were 70,000 nuclear bombs around the world. It's kind of insane to think about. Today, there's 12,000 still. So a country like Iran, if it achieves the ability to build one, in the grand scheme of things, it's probably dangerous for Israel, but it's probably not a big danger for the entire human society. On the flip side, what it does create is it creates the need for other Gulf countries to create their own deterrence. And so part of the deal that is currently being struck by India, the United States, Israel, Jordan, and the Saudis is that the Saudis will get the ability to also enrich uranium internally, in exchange for normalization and a lot of incentives for the Saudis, and a very unique railroad system to compete with the Belt and Road Initiative that will run from India straight to Europe, through the Gulf countries, the UAE and Saudi Arabia, Jordan, Israel, and then to the Med. So I think that what's occurring here is because of the huge incentive that that the United States has to normalize the Middle East as much as it can, so it can leave and divert more of its budget towards the South China Sea. They are really bribing other countries with amazing deals that they would never be able to achieve a few years back. And that's what's happening. It's very interesting with Iran as well, the situation, and what they will do. But yeah, it's the Middle East for 4,000, 5,000 years. It's been nothing but a mess. There has never been a country in the Middle East that has been able to survive and be a democracy for long. And so we shall see about the experiment called Israel that's been thriving for 75 years, but who knows? It's a very unique region with so many tribes and so many different ethnic groups. And it's just very unstable. So I think that what's happening right now, because of the huge incentives of the world's largest economy to make something happen, it has a chance. But we shall see.
So explain to us what you're seeing in regards to Saudi Arabia betting on China and potentially leaving the US dollar behind.
Yeah. So I wouldn't say they're leaving the US dollar behind, but I do think that they understand that when Iran attacked their oil fields with drones in under Trump, and the United States didn't do anything, that was a big signal that, hey, for 50 years we've been your sugar daddy. We have kept you from harm. We have made sure the seas are open, that the Straits of Hormuz are safe. We have made sure that you can export your oil to the world. And we think that you should rethink how much we are going to protect you. And Saudi Arabia is a country that it does have a military, but it's just anything that's not in air conditioning, they don't like to do. So they always had someone to protect them. It was the British before the Americans, and now it looks like they're just hedging and looking towards China and India as well. So I don't think they're ditching the US dollar, but certainly they're not looking at the US as the one-all be-all confidant for them going forward. And it's probably smart.
And what is happening right now with the Chinese economy? I'm seeing conflicting messages these days. I've seen Peter Zeihan claim the country is on the verge of total collapse. We've seen some front covers of prominent American publications claiming that the era of China is over. I've also spoken with Louis Vincent Gave, and he's saying that that's far from the case. The Chinese economy is, although there is weakness, it's much stronger than the Western media is making it out to be. So what are your thoughts on the matter? What are you seeing there in terms of the Chinese economy?
Well, it's certainly in a deep slowdown, um, and they do have a major hiccup, which is their housing market. In 2008, when the subprime mortgage bubble burst, that was 8% of US GDP. Housing is 25% of China's GDP. It is a huge problem. But their banking system is really healthy, robust, and that can be their ticket out of the housing crisis. Now, even if their housing crisis doesn't take 20 years to solve and just takes a few years to solve it, it is still a real crisis. And they do have a lot of problem with youth unemployment. They have a problem with demographics that's not going to change. They are shrinking at an unprecedented pace in terms of their demographics because of the 330 something million abortions that they had during the one-child policy, people just not having children, and because their stock market is just not existent, uh, the average American has his wealth tied to the stock market and to housing. In China, just housing. So their model is over. So I think that to say that China is collapsing, that's just not the case. It's not true. They're too big to not get over this hurdle. They are very westernized in so many ways in terms of their economy. Their technology is amazing. They are a huge leader in AI. They can actually be the leader in AI. Their military is incredible. I don't think they're collapsing in terms of like the trajectory, but I do think that for um, the next 10 to 15 years, they will be reshaping their entire model because we are deglobalizing and they are no longer important for what they were, what got them here. Between the 1980s and the 2010s, they offered the world an unending pool of labor that urbanized from the villages and helped support low wages around the world and created an incredible arbitrage for Western society. In 2011, their labor pool peaked. And actually, in the 21st century, their salaries have gone up by an order of 20-fold. So they're not a cheap country anymore at all. In fact, I think there are about 55 or 57 countries that are cheaper to manufacture than China. And of course, they're not as huge as China, but it's just not cheap. And when you add the regulations on foreigners and everything else they're trying to do, they themselves know that the path forward is to create their internal consumption and really build a middle class that is big, because their middle class right now, I think, is about $10,000 or $12,000 a year in annual income. Compare that to the United States, where it's I think like 54. So what they're trying to do is move on to the next model of China, and I think that predicting the end of China or something like that, it's just too grandiose. I don't think so. I think it's just going to take a very long time for them to figure this out, because they're not a capitalistic society where the free markets can, entrepreneurs are not allowed to think their way through this. It's going to be very much a marriage of the CCP and the private sector. So I do think that they are in for a very lengthy reset, and because they were the engine for the world for the past 20, 25 years, we are entering a very slow growth period for China. It's going to impact a lot of other countries, but it's also going to create a lot of wealth for countries that will receive industrialization back, factories back, good jobs back, etc. All this is to say, deglobalization is a period of higher inflation, higher prices, more unions, more labor issues, a lot more regional wars, countries trying to to move the chessboard a little bit in their favor, um, because globalization is supported by one monstrous empire looking at everyone else and say, hey, if you do anything, we're the police here. We're. And deglobalization means that they're exiting that role and allowing the chips to settle. And when you do that, um, a lot of regional wars happen. And in fact, the last deglobalization is between 1910 and 1950. And what we saw between 1910 and 1950 is the formation of a central bank in the United States, the worst president in the United States history, Woodrow Wilson, coming to power, the World War One, the Roaring Twenties with the Great Depression, the rise of socialism, fascism, and Nazism, and World War Two. So deglobalization is very risky, very dangerous, and hopefully we don't live through something similar in the next 40, 50 years here.
So let's shift now to the financial markets, to the economy. And I wanted to get your take on interest rates. It appears we're in a higher for longer interest rate environment, at least in the US at the moment. Do you expect global interest rates to also be elevated for the future? And how could this impact gold? And does it also potentially heighten the chances of triggering a recession in your view?
100% on the recession front. It's very difficult for countries to stay under the dollar system with interest rates this high. When interest rates rise, all countries want to have more freedom and flexibility, which means that they want less dollars, and they want to be tied to their own currency. So de-globalization is also de-dollarization at the same time, because why would you tie yourself to a currency that that creates so much credit choke for your own country? It doesn't make any sense. It makes a lot of sense when interest rates are going to zero and credit is everywhere, but right now credit is disappearing. Trillions are extinguished out of the money supply, the global money supply, and China and Japan, the world's two largest holders of two largest foreign holders of treasuries, are dumping treasuries, and who's buying them are U.S.-led institutions. So these would be your pension funds, your university endowments, your big money managers. These are the institutions that are buying the debt. It's also incredibly uncertain because the interest rates have risen so quickly. It's hard to understand what to do. And so a lot of money record amount of money has moved into money market accounts. And money market accounts is just a symptom that tells you, hey, I have no idea what to do next. So in the meantime, I'll just get my 5% and be liquid. So the entire world is basically a huge option right now. That is how, retail is not in the stock market. Retail is not in housing. Retail is in money market accounts. So anyone thinking that there's a bubble in the stock market or bubble in housing or whatever, there's no bubble. There is no retail bubble at all. The bubble, quote unquote, is in money market accounts. But prices are so high because whoever is in the stock market is thinking to himself, well, I've gone this far. Why would I sell? Interest rates have gone up so much. If they come down, I will be a sucker to sell. Same with anyone holding housing. Why would I sell now? On the flip side, the sellers are like, no. All of these people will have distress very soon. I am not buying now. So everything is frozen. Everything is in a huge stalemate. When I talk to fund managers, money managers, hedge fund managers, they're all saying the same thing. He's wrong, I'm right. And it's a huge stalemate. So I think that what it means is that we are headed into some sort of an environment where this becomes unsustainable. And to me, it's soon. I think that you cannot continue to have what you have right now. because it's creating a lot of disruptions. And uh, I think between now and the elections, the Fed is either going to see a lot of signs of distress from consumers because consumers lead the U.S. economy, and growth will be actually zero, or you will head into negative territory, and then you'll see some easing into June or July of next year. So before the elections, um, because there will be a lot of political pressure on them not to be in charge of a recession right before an election. On the flip side, if the U.S. economy continues to show resiliency, I think that they will try to stay higher for longer, but it doesn't matter. Higher for longer just means that they are not letting the inflationary forces in the economy play out. They're just delaying it. At some point, there's a lot of inflation in the system that needs to be resolved by the free market forces. It's just like on the other side in 2009 till 2015 when they dropped interest rates to zero, started QE, but they didn't create the inflation that they wanted. Instead, the market just got over after 6 years all the deflationary forces, and by 2015, it was more normalized. And even then, when they started raising rates to combat the renewed inflation, it was very slow. So I think that they will do the same mistake on the other side, and we will have a lot of inflation until 2027, 2028. And at that point, the inflationary forces in the economy will actually just solve themselves. And all they would have done in hindsight is just delay this process. So I think that that is literally the role of the Fed, to smoothen out the natural courses of the economy. But in the end, they don't smooth it out. They just interrupt. Now, sometimes they interrupt, and it's for and there's a use for that in crisis, but we're not in a crisis right now, and I think that they ought to let the market dictate more than let their internal thousands of economists that lead their research dictate.
Yeah, absolutely agree with you there. Before I do let you go, as we wind things down, I did want to get your thoughts on the commodities sector and anywhere you think there's currently opportunity in the market, given everything you've laid out in terms of the geopolitical chessboard, the higher for longer, in terms of interest rates, and the potential for a recession. You mentioned having your hands on some physical gold as an insurance policy. Definitely also agree with you there. Are you seeing any opportunity in the commodities market, in energy, in uranium, in the precious metals miners, and anywhere else, any other asset classes that you're currently looking at in terms of upside potential?
Okay, I do think that there's a lot to be said about the uranium bull market. We've been bullish with Wealth Research Group, with our newsletter. We've been bullish on uranium for a couple of years. I think the price started at like 22, 23 when we started really laying down the importance of uranium for the future, because it's a really important baseload energy. That actually also serves the ESG agenda, but also with so much technology in place, it's becoming very safe, cheap, and do you ever talk about small modular reactors on your channel?
Yes.
Yeah, so it's becoming it's game changing. And I think that the fact that the price of uranium has gone up to 66, and that a lot of uranium companies are trading at all-time highs is not a bubble. It's real, and actually, I think that the price can go higher still, because we have a huge deficit in the annual demand for uranium, plus I'm sorry, the annual supply. Um, Plus, there's a lot to be said about the way that the world works right now in terms of who produces the uranium. and who has the control over the value chain, so the processing, etc. The United States, being the world's largest consumer of uranium, they create none of it, or they mine none of it. So they import, outrageously enough, about half of it from Russia, and then they do more from Kazakhstan, which is a I wouldn't say a proxy Russia country, but it's certainly not a U.S. ally. So there's a lot there. So I think uranium is very interesting. Personally, I also think that natural gas, if you look at it, it's up already 50% from the lows. So that's also interesting as well. And it dropped from $10 to $2. So it had an 80% bear market. It's only up 50%, from 2 to 3, or not even 3. So I think that there's some opportunities there. That's more energy, right? Um, Lithium, I think the opportunity with lithium uh, is actually in a lot of these companies that are able to easily discover lithium. It's becoming very abundant to discover lithium, and so it's weird how you can. Lithium is one of those metals where you can buy a few companies in the same region where a lot of discoveries are being made, and in the aggregate, you will make you can potentially make a lot of money, because some of them obviously will fail, but the ones that do work out, they have explosive price appreciation. We've seen ones that go up by 10-fold, 20-fold, 30-fold in 1 year. It's unbelievable. So I think with lithium, if you find regions in Canada, and right now it's in South America that's starting, and not in the triangle, but in other areas, Brazil, for example, if you can find the early ones and build yourself a nice little basket, I think that's worth exploring. No pun intended. And then I think with gold and silver, gold is interesting because it's trading at all-time highs in about 70 or 80 fiat currencies around the world right now, and it's very close to its all-time high in U.S. dollar terms. To me, I think that the big move for gold can only come after a rate cut, and so that's my opinion on gold. I think with silver, it will only start to really move after gold is in an all-time high. So that's my thoughts on gold and silver. I do think that the exploration world, or the miners, I think that the exploration model is nearly dead, because of ESG and compliance and everything else. And high interest rates, to raise money for a project and then drill it. I don't know. It takes 15 years to bring a project into production. It's just too long. I think that the exploration model, what will end up happening is you will have mega explorers. You will have companies that have a $30 or $40 million budget, and they can afford to test a lot of their different projects, and they can afford to be wrong. And what you hope is that by having this huge land package, that they have a lot less risk. But I think that the old model of a little explorer, I think that is a little antiquated for the time that we're in. So this is commodities. If we look outside the world of commodities, if we look at the general markets right now, Jesse, it is true that the S&P 500 and the Nasdaq, they're not cheap, but it's because about 30% of the weight is in 7 or 8 companies that are the best businesses ever in existence, and run by some of the most amazing people the world has ever known, especially in business. And they trade for 30 or 35 times earnings, and that creates this distortion. But if you look at the Russell 2000 or the Wilshire, or just break down companies, you'll see that the market is not expensive. And so my point is that I think we are in a stock pickers environment, even in the real world, in the Wall Street world. Um, and that is actually nice to see. So if you want to see the companies I'm investing in, you can literally download my portfolio from wealthresearchgroup.com/portfolio. And of course, if you follow our newsletter, you can learn more all the time as I make updates. But I don't have any problem investing in stocks right now. There are phenomenal companies trading at very reasonable prices, and I don't have any problem putting money in debt. If you are an accredited investor listening to this, there are opportunities for you with credit funds that pay 10 or 12% bunker, okay, on quarterly distributions. This is the world we are living in right now. So I think that as an investor, this is a world for debt right now more than equity, in my opinion. And I think that the way this changes is by companies starting to raise their dividend yield. I think that more and more companies will find it hard to reinvest in growth, and that more companies will start to dish out their cash reserves back to shareholders. And I do think that that is how the gap between the dividend yield of the S&P 500, which is, I don't know, 1.8 right now, and the 10-year Treasury that's 4.5, and obviously is much more juicy. That's how that gap. That's how they bridge the gap. I think the dividend yields are going to come up.
Well, it's been a great conversation, Lior. So much knowledge shared. Really appreciate it. Could you tell us about Wealth Research Group, what you do, what people can find there, and anywhere else you'd like to direct people online? Feel free.
No, thank you. Yeah, Wealth Research Group is a free financial newsletter. Basically, it's a way for me on every Sunday, Tuesday, and Thursday to recap my thoughts, almost like a financial journal. It'll be macro, geopolitics, almost like listening to an interview like this, but it's a 5-minute read. And so I like doing it. I like sharing it. It purifies my own thoughts, and that's where you can find us.
Great. Well, I'll put a link in the description below for anybody who wants to check that out. Thank you once again for joining us today, Lior, and sharing all your knowledge with the audience.
Thank you for having me.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.